Good day, traders. Hope you guys are good and welcome to the 21st edition of our market breakdowns. So without wasting any time, if you're new to this channel, kindly hit the subscribe button and also like this video because it helps with the YouTube algorithm. If you're a returning subscriber, welcome back. And I hope you guys find today's video educational. So we're going to start by looking at GBPUSD. I'm going to do a top-down analysis similar to how I've done it last week. So without wasting any time, let's get right into it. First of all, we can see that we are on an area of supply. Now, this is a very interesting area of supply. Well, we're interested in it because it's been confirmed. Also, we're in a long-term downtrend. So what we know about downtrends is that unless the market violates a swing high, we're still going to continue with that trend. We're familiar with manipulations, we're familiar with liquidity grabs. So however the market reacts, if it's a trend line breakout, we don't necessarily care about that. As long as a higher time frame supply or demand area hasn't been violated, for us, that trend is still intact. So this is exactly what I'm seeing on GBPUSD, right? We're only gonna focus on this small piece of data, only because on the monthly, we know that the market takes time to reach certain areas. So you can get away with using only small amounts of data on the monthly, because on the lower time frames, there's a whole lot of information from which you can make a decision. So information number one, on an area of supply, right? As you can see, we have this first retest. The market formed another area of supply, and this is where we got our reaction, right? So that area hasn't been violated, that area of supply. So the market got into this area of supply, and now we are here. Now, actually, from this, by virtue of this, also because we're in this trend, we should be expecting the market to drop. Now, I just want you guys to bear in mind that this monthly candlestick over here, the one that we're seeing, this white one, hasn't been closed because it's still mid-October. So a lot of things can happen between now and month end. So bear that in mind. We also have this area of liquidity. Let me just use this one. Yeah. So say, for example, the market is reaching for areas of supply on lower time frames. There's a possibility that we're going to get a drop to the downside. Now, areas of interest for me, especially if we're looking for areas where we can get an opposition, is this area over here. What makes this not a good area for me personally is just the formation on the candlesticks over here, right? And also, we don't have a large gap. So another area of interest is this one. We already know we have a large red flag. So these are the two reasons why I won't be considering these two areas. But then the market might find, I'm going to be honest with you guys, the market might find buy orders here to fill. We just have to look on lower time frames to see how that will look. But yeah, let's move on to lower time frames. Now we are on the area of monthly supply, right? As you can see right here, there's nested weekly supply, and this is where we got in our entry, right? I'm just gonna use a different shade. Yeah, so as you can see right here, I always say the arrival on a level, right, should be as strong as the departure from the level, right? So as you can see right here, the market has been in a bit of consolidation, which to us could mean that orders are getting filled. Because generally speaking, if you went into an area of higher time frame supply, the expectation is the market might move away from that area in a strong manner, right? But that's not happening. So either orders here are getting filled and going to get a push to the upside, meaning we're only going to be interested in buying from this pair if we get a break from this higher time frame supply areas. Or there's just a lot of manipulation and price is eventually going to make its way down. So think of this as a redistribution, right? So this is what I'm seeing. The market is reacting off this area of supply over here. Now, what makes this not a good area of supply? Number one, when you look at where it's located versus the higher time frame supply, it's an area of demand. If you look at it from where it's located versus higher time frame supply, not ideal. If you look at the departure away from this level, not ideal. So because of those two factors, I believe that this area is eventually going to get broken through. Right? But do not cancel it out until the market eventually breaks through it. So it's still valid, but it's not a good tradable area. So that's where the market's reacting right now. So what do I think will happen on this pair? If you're looking at it, before I go to the daily, if you're looking at it from a retail trader's perspective, you'll see that there's actually a trend line breakout over here, right? Impulse, correction, and then they're looking for another impulse. So I just wanted to highlight that factor. But yeah, for me, I do believe that there's potential to continue to the downside on this pair. We just have to get the right confirmation. So on the weekly though, there's this nested supply area where the market is located right now. It's not a good area, but then the only thing that's working for it, to be honest, is the fact that, how do I draw this? It's the fact that it's within a higher time frame area. That's the only thing that's going for this area. Look at it, look at the time spent away, consolidation away, it resulted in a break of structure. So on a lower time frame, we might see a break of structure in an order block. So that's what I'm seeing right now. That's where we at right now, right? If this area does not work out, we can also trade from this area over here, right? This area has a strong departure from it, hasn't been tested. And for me, those are the two areas that we must consider. So either the market will drop from this area over here, or the market will continue to the upside, fetch orders, and then drop. Let's go to lower time frames. Now we have the daily. As you can see, there's a break of structure that I was talking about. There's a break of structure over here. The market is going back to test an order block. Now, a good area where the market can find potential opportunities is this discounted area, especially if you consider where it's located. I'm going to use a different shade. So yeah, this is what I'm expecting to see on GBPUSD. You got this break of structure. Now the market is making its way to this area over here. This is where we're going to place our sell limit. And then this is what I'm expecting to see on, if we break through this area, we're not going to be looking for orders on this supply area over here, simply because there's an area resting above it. So it's not nested or it's not located within a higher time frame supply area, which makes it a lower probability area. So we'd rather trade from this area over here. But if you wanna hear if you wanna know what my sentiments for this week are, I think that's what we're going to see. But if it hits our stop loss, that's the next area. Now let's move on to another pair. Now we are on GBPNZD, and to be honest, it's been a while since we've looked at this pair. As you can see, we're in this downtrend over here. The market looks like it's in its correction phase. Now, let's look at our levels. This is an area of supply. Just want to change the color. Right. Actually, this area hasn't been confirmed. The area that's been confirmed is this one over here. Yeah, that's better looking. It's already been tested twice, meaning if we get a third test on it, it's probably going to be a low probability. Chances of the market breaking through that area is very high. Also, another piece of information is that we have liquidity over here. And what we know about liquidity, those are magnets for price. So price has a tendency of going to those areas to take out retail traders. We also have this area of demand over here where the market could potentially get orders. So from this, supply is in control. If you look at the supply and demand curve, we very much middle ground, but almost at supply, almost on sell territory. So you can easily say that the price or the market is going to go down in the long run. Now let's go to a lower time frame to see how we can get an opportunity from this pair. Now we go to the weekly and it's more clear. We got this trend line breakout over here. And then this is what I hate about this pair. The areas of supply and demand are not ideal, especially if you refer to how it's supposed to look textbook wise. You get a lot of areas of supply where the market can hold or will hold eventually, but then it's a lot of wiki candlesticks. I mean, look at the area. Just gonna show you guys now. Look at the area where the market recently acted off. There's a lot more than what we are looking for. So this is what makes me be conservative, especially when I trade these kinds of pairs, because you might be confused as to what types of areas you should be trading from because they don't look ideal. But anyways, we use what we know about the market and we rely on experience also and also back testing. So yeah, anyways, this is what I see. Look at these wicks. So definitely this is a weak area. So this is where I'm expecting to get my first liquidity grab. Anyways, we got in a reaction of the supply, been tested twice already. And now we're expecting a drop. So for confirmation, let's go to so on lower time frames. This is the daily where we're going to take our entry. You'll see that there's been a break of structure over here. And the market made its way up to find an order block. It's been broken through. This is the next best one. Not ideal because of the stair. It's called a 3-step staircase. It's not an ideal area because we're normally looking for engulfing patterns. But anyways, this is where we got in our area. Now there's liquidity over here because of the equal lows. So definitely we know that the market is going to be making its way all the way to the downside. And I actually think for some weird reason, this is a missed opportunity. All right. Now we can take a bit of a gamble on this pair. And because we were supposed to enter here, I wasn't monitoring this pair, I'm not going to lie. We were supposed to enter here, put our stop loss here, and then our take profit. First take profit on this area of liquidity, next take profit somewhere. But because of the fact that we didn't get an entry the minute we were supposed to, we are forced to make late entries. Now, we can either find it or enter here and use a wide stop loss, or we can go to the lower time frame, right? So that we can minimize our or maximize our risk to reward. meaning we use the smallest risk possible to maximize on our gains. So yeah, let's go to the 4-hour and see if we can't find an opportunity. So yeah, if you're considering entering on this pair, I suggest that you do so at current market price. Put your stop loss above structure, a few pips above structure, and put your take profit on the next area. Now, let's see where that area is. Okay. So our first take profit will be at 1.91780. Our next take profit will be at, use proper risk management, guys. Use proper risk management, guys. I have a video on risk management and it will definitely help you. So this is how I'm going to be approaching GBPNZD. From a retail's perspective, we had this trend line breakout and retest with this candlestick over here. Just had to put it out there. So yeah, let's move on to another pair. Another pair that we should look at is NZDJPY. Now, the reason why my drawings are still on this pair is because the market hit our take profit, both of them actually. So I think it's a matter of where next, because we already know that in the long run, we should be just expecting buys or trading the buys. So how I would draw this now, I would remove this, right? Let's go to the weekly. On this weekly, another area of supply is over here. It's actually the better looking one because of the departure away from that level. We have this break of structure over here. And what I believe will happen is that I believe the market will eventually find a way to this order block over here. And then we can find an opportunity, because if you look at the departure from that level, the time spent away from that level, all of those to me look ideal, right? Remember, like with the market, you don't always have to rely on how a certain pair should look according to the textbook, which is why even when I was doing that series on support and resistance, I emphasized a lot that you need to take away your thinking from, okay, this is how it's supposed to look according to the textbook. Because more often than not, we are more concerned with behavior. How is the market behaving? Okay. And from experience, because you've backtested a certain pair or a certain strategies on specific pairs, where does it work? Where does it not work? On which pairs should you make adjustments? On which pairs should you expect the market to behave according to the textbook? So all of these things, you get information from experience. So yeah, that's what we're relying on. So yeah, what I was saying is I was expecting a movement to the upside, the market to find some opposing supply like it is right now. There's opposing supply over here. It's low probability because of the higher time frame supply. The market might go up higher a bit, reach this area of supply, and yeah, after we hit that area of supply, we'll take our first profit here. Expect a young correction, I don't know. But all we know is that in the long run, this thing's going up. Let me fix this. So yeah, this is what I'm seeing on NZDJPY. Let's go to the daily. So we're on the daily, right? This is the area where we're expecting the market to react. So my discounted supply is over here. And then the next best area of supply is this area over here. I'm not of demand, not supply, demand. So yeah, I'm expecting the market to find some orders from the supply over here. It's going to be a sell for this week, but a very low probability sell. I wouldn't suggest that you take the risk, if I'm being honest. But if you're keen, you can take the opportunity. So yeah, this is what I'm expecting to see on NZDJPY. Let's move on. Now we're going to end this week's segment by looking at the dollar index. Well, let's go to the higher time frame to just remind ourselves, because I seem to be forgetting. So yeah, the market has to break through a lot of areas to be in a position where it will go down eventually. I mean, we've gotten this break of structure over here, and the weekly has to find an order block, go up. So if you look at it from this perspective, the next best area, okay, it's this one over here. If you looked at that at those two videos that I uploaded on identifying areas of supply and demand, you'll understand how we graded this area by looking at those lists. So time spent away, break of structure, warawara. If you considered all of those elements, all of those factors, you'd know why we're expecting the market to go back to at least this area over here. Now let's go to that, go back to the daily. Yeah, it's that demand area that I was talking about. If we don't get if this area doesn't hold, then this area, we definitely expect the market to hold from this area. So yeah, let's keep a lookout for this. Let me just do this real quick. Yeah. But anyways, guys, hope you guys enjoyed this segment. Hope you find value in it. And I'll see you guys next week. Same time, same place. Subscribe if you still haven't. And peace.